Hi, Paul Heinze with Goldberg Heinze Business Advisors. Somewhere along the line, you've probably heard the term family office. You've heard the term capital management, wealth management, and a lot of things that are familiar to varying degrees with people. Today, I'd like you to have the opportunity of meeting Sean Sebold. Sebold Capital Management in Lisle, Illinois. We're going to drill down into family office, and we're going to find out what it's about, what it can do possibly for you, and what are some historical or some trending areas that you may want to pay attention to. And we certainly invite you then to contact Sean personally at the end of our podcast. Sean, glad to have you.
Great to be here, Paul.
Tell us about family office in the context of business and capital and assets, please.
Well, sure. Family office has started quite a long time ago, and generally it was reserved for those of the ultra high net worth. And when I mean ultra high net worth, I'm talking about families that are worth between $500 million and $1 billion or more. And the purpose for those family offices were to manage the family's money, but because of the size of the assets, there were so many different things that had to be incorporated within their planning. And I can kind of break those things out in four different purposes. So first, you would have an advisory purpose. You would need investment advice, where we're going to put this money. The second would be in a financial planning capacity. That would incorporate cash flows. That would incorporate tax planning. That could incorporate risk mitigation planning. You'd have strategic advice. Are there structures that the family should need to get involved with that would impact the overall wealth over generations from a strategic perspective? And lastly, there's a governance perspective. Many of those in the family office world have run businesses, very successful businesses. So how do you take that successful business and move it not just from first generation to second, but second to third and third to fourth? There is a phrase in the business world, in the business owner world, that you go from shirt sleeve to shirt sleeves in 3 generations. Having a good, strong governance policy and setup can certainly take that challenge and eliminate many of the risks associated with intergenerational wealth transfer. So that's kind of the overview of the family office. And obviously what we've seen that with technology, with all the things that we're getting better at, more efficient at, it is possible now to take what used to be the caveats or the holders of family offices was ultra net worth, and we've been able to bring that down. Very much like, in the ultra rich were the first to fly. Now everybody flies. The ultra rich were the first to have their own private jets. Those costs are coming down through many different mechanisms and leasing and private shares of particular company or particular airplanes. So all those things are coming down, and we are able to now provide some of the very important family office type services to those that don't have $1 billion or $500 million.
What would some of the initial thing, let's assume in our world of mergers and acquisitions, a hardworking guy or the founder of a company has built a business up into several $1 million, and the time to sell for whatever reason. And here they're sitting on a pile of net money. And now they know you. What would you sit down and talk with them about first, in the redeployment of the family capital, for example?
What's most important when you're thinking about family capital and you're thinking about transition to a liquidity event is what your goals and objectives are. At this point, it might be trite, but Lewis Carroll wrote in Alice in Wonderland when they were talking to the Cheshire Rabbit. Where would you like to, which way should I go, Cheshire Rabbit, was the question. And the answer was, well, that depends a great deal on where you want to get to now, doesn't it? So the same thing with family wealth, with any kind of liquidity event. The first part that has to be done is introspection, looking at what you've done, where do you want to get to? What will money provide? What will money not provide? So once that fact find, that goal planning, those future looking plans are looked at and developed, then you can start putting money against it and say, I want to accomplish this. This is what I need to do in order to get there. But those that come into money, they create a big liquidity event. The hardest challenge they have is what's next? What's next? Because I didn't have this kind of money. I didn't have 5 million or 10 million or 20 million before. Now I do, but that opens up just a world of good and challenges as to what to do with it. Do I give my children lots of money? Do I donate lots of money, and how do I do it efficiently? How do I minimize taxes in this transaction? So understanding what a client wants to do is part of it, but more of that is helping them find out what that is, because many people don't know how to get to that next step so that they can get to the Cheshire Rabbit with clarity and say, I want to go this direction. How do I get there?
Would they be going and thinking and planning as an individual among others in the family office, or are they the family office singularly with the executive, the wife, and the husband's spouse, or the husband with the wife's spouse, or is it collectively more embracing to project into other generations, for example?
That's an excellent question, because that is part of the discovery process. Who should be involved in this? Who gets involved? What role are the decisions made through? So that goes to the governance question. Is this the patriarch, the matriarch? Are they going to be a joint team? Should we bring in next generation, bring them in as part of the team? And that will decide what the action steps are moving forward. If you have a family business and you sell part of it, do you get the next generation involved in it? And then what decisions would they make? Would they be just part of the business, or could they be part of family philanthropy? All of those are really dependent on how that mission, that family mission, is set up, saying this is what we want to accomplish. And then we're going to design our action steps around driving it towards that goal. Again, back to where are we trying to get to? That's what we need. We need to make sure that we have a really clear understanding of that, try to get to, and then we place the actions around it. Because for some families, maybe the next generation doesn't want to be involved, or they just want to inherit, or they just want to be involved in philanthropy. Okay, those are all very different ways to go, but it has to be discovered that that's the direction we're going.
Well, few of our clients who have experienced this personally would argue that giving the third generation, for example, big buckets of money is a real serious error. Okay, so the depth of the family office can, from my understanding, have not only the thumb on various different investments, trends, and types of investments, but areas that the family can go in. A most recent example, an entrepreneur had a business, but he has children, grown children, that are not in the business, but they're individually successful in their own right. No family office is in place, but there is such an age, not ancient, more than middle age, but they're mature in most every respect. Can a group of siblings, along with parents, make sensible, attractive, and successful investments in a family office after the fact, when most of them are in their 50s and above?
They can. That would necessitate the family being a close, cohesive unit
Mhm,
and the family wanting to intermingle.
mhm.
Now, it does become challenging after the individual success of each one of the family members, who would look back and say, what's my value? I mean, do I need this?
What's my,
Right. So can it be done? Again, there has to be some value component that they would all buy into. And most frequently, when we see those kind of things, it is around the area of philanthropy. Is if 3 of 4 are successful and they want to get involved and they need some help with, perhaps creating a family foundation, or even just getting involved in creating a nonprofit that they're going to manage themselves. And maybe, 4th child can get involved in that. But once success has already been made, then it becomes more of a challenge to go backwards. Usually these processes it's easier to go forward, but it can be done in certain circumstances.
what would your view possibly be in the most general descriptive terms of a couple that has gone through the selling process and gotten a substantial amount of money? They had no children interested or no children at all in terms of where to distribute the money. The children that didn't have any interest, say, for example, and we've run across cases like this, that there are challenges, that there could be mental or physical handicaps wherein care, guidance, and support would be necessary after the parents are gone. And there are just a couple that doesn't have any children that wants to know what to do with their wealth. When should they do it? When do they give it to the charity of their choice, the church of their choice, or whomever of their choice? What are some ideas along that area?
Yeah, those are excellent questions in this space. And again, they have to be thought out in context of the family and what makes the most sense. So in the case where we have next generations that might not have the capability, either physically, mentally, or just have the ability to create wealth as matriarch or patriarch has done,
Yes.
then what do we do? So there can be, how the family is set up with either a foundation can be set up or within trust documents that have to be, the challenge to the trust document is it has to be able to think about what could happen in the future.
That's right.
So going through that process and saying what can happen, the advisor, the family office advisor, where their role would really come in is to help the family sort through the important decisions with knowing not necessarily the detail, but the potential pitfall. Is this child going to be on government aid somewhere? If you do this, will that help or will that hurt? So it's advising about those pitfalls and then setting the structure for that.
Mhm.
So that would be in that case. When it comes more to the charity case, charitable giving can be a job. I mean, you want to make sure that what you're doing has an impact. What you're doing is going to affect some generation in the future. At least that's most of the people that we work with is, I don't want to give money to an organization that has literally billions on their balance sheet. An extra 10 million will just add a little bit, but really it's not going to have an impact. So you're going to look for a charity maybe in the smaller realm. But then again, if you have a charity that has a budget of $1 million a year and you give them 10, they might not have the capacity with which to handle that. They might not be, or they might try to expand too fast in the expectation that they'll get more. So a lot of due diligence has to be made and structured. Maybe it's not one lump sum, maybe it's some over a certain period of time with certain benchmarks that charitable organization will impact. There can be benchmarks with regards to what you would expect them to accomplish. We're working right now with a newly structured 501c3 that's going through all that right now. Where do they place where's their place of business going to be? Who is going to be the executive director? How is this all going to be set up? So each one of those, there's going to need to be those kind of questions asked. And ultimately it goes back to where's the impact you want? And it can also be in different spaces. It can be in education space. It can be in mental health space. There's so many different things. So having somebody who has dealt with that can bring back that helpful content that says, okay, this is going to be a investment, a social investment that has value.
When you walk through with the principals, a couple, two brothers, two sisters, whatever it is, when you walk through and ask them, what's your vision? What do you see as the end game here as to what to do with what you're going to be handing off, in addition to having a comfortable life and doing some really nice things for either charities or churches or what have you? What if they say, I don't know? Can you give them unnamed examples of case histories of things that you've done successfully?
We do come across that a lot. And what we found in the charitable space, for those, first of all, we can't go down that charitable road if a client doesn't have a desire to be charitable. I mean, there are good tax reasons, they're all that, but for those that said, you know what, nothing tugs at my heart, nothing I can do. So if they said, I think I want to go in this route, then it's exploratory. I mean, it is, here are some more, let's first look at the problems of society. Can we help solve one of them? Do we have enough impact to do that?
Yeah.
Okay, where can that be? We have people, and we've gone through this process of education. So, and then it was, how do we structure an education? How do we fund a chair at a college that will have an impact? What's the best structure for that? How do we do that? And then we introducing the client to that organization and showing them, this is what's been done in the past and look at the impact. And if that doesn't get it, then we might go to healthcare. Do we want to work in, for perhaps the very early stage research of specific drugs that normally don't get funded? Yeah. We've taken clients through that where, there was a drug that was not getting any funding because it had such a long shot to actually achieve its goal, but they did it. And this is actually a very big drug right now in the world of blood cancers. So seeing that it can be done and they might be the long shot that saves lives, yes, that's fantastic. I mean, that's the stuff that you go, you know what? I gave the next generation something more than I could had I have not done this.
Excellent. I have to ask this because I'll bet you a donut that several people watching us now are going to ask the question, what happens when the principals are involved in family wars? The sale of the company didn't go well because there was angst and a lot of really ugly circumstances. And now we're going to be selling the company, and the children of the second generation and a reach perhaps with a third generation is not going to be roses and daisies and petunias. We're going to have a sour circumstance. Do you have case histories perhaps where some recommendations or some input might be given as far as guidance in what to do in an angry situation?
The secret to the angry situations are communicate, communicate, communicate. And then it's empathize, empathize. So where, you do not want to get into those situations as much as you can possibly avoid it, because it, always ends up in litigation, which subtracts value from both parties. So it's a lose-lose. So it's trying to negotiate and trying to get to a, what's most important. And frequently in those situations, and fortunately we haven't had a lot, because in our process, it's let's design this up front. Let's get all the stakeholders involved as soon as possible. Let's design the mission for what we're trying to do with the organization. Let's try and make sure that here's the process for getting to the next generation and to the next generation. Things like, if somebody wants to move into a family business, that's great, but you got to graduate and you got to work somewhere else for 5 years before you can even hope to come in. And then you have to apply and things like that. So understanding this is the rules, because if the rule is, if it's out there, it's understood and never written down, then you get into a circumstance where someone said, I thought you said, or I understood this to be the case, and they might have spent 2 years going towards something that wasn't really true. And then of course you're going to get animosity because it wasn't clear. I was going to graduate and I'm going to work right at the company. And you're like, no, that's in the rules. You can't do that. So as clear as they can be set out and as early as they can be communicated and reviewed on a regular basis. This is what a family meeting is all about.
Right.
Remember, guys, here's the rules. If you want to work in this company, you have to perform the following things. If you don't want to work in this company, here's the way that you're going to get some economic interest in the business. But be as clear as you can up front and try to get to those before they actually happen. Otherwise it's just backtracking. So.
And at every family meeting, you check your guns at the door, right?
Absolutely.
This is why I saw, and I really got my attention. In your website, which is SeboldCapital.com, our experience, expertise, and implicit dedication to achieving our clients' goals distinguish us from other firms in wealth management. We pride ourselves on the ability to look our clients in the eye and say what we ourselves would do. And I get that sense, and I appreciate the individuality, and I appreciate the reliance on the fact that the people who will be calling you in this regard will divulge clearly what their objectives are so that the facts can be laid out for experience-based decisions. And I'm very grateful for you being with me today. And I'm asking, tell our viewers how they might get in touch with you personally.
You can reach us by old-fashioned phone at 630-548-9700. We do have the website, which is www.seboldcapital.com, spelled SEBOLDCAPITAL, or via email at sts@seboldcapital.com. That comes right to me, and I'll be happy to answer any questions that I get.
Sean, thank you. I urge you, listeners and viewers, to get acquainted with Sean, because there is no one-size-fits-all solution. Everyone's joy is in the accumulation of wealth and asset appreciation. Try to avoid the tank traps and the speed bumps, and talk to somebody who knows what they're doing in privately owned companies especially.